right now we have existing home sales and, of course, those surprising a little bit to the upside. Michael McKee, you can give us the data.
Now, we have very strong data for existing home sales. They're up 3.2% for the month of May. That's after a 7/10 gain in the month of April. And it's certainly way ahead of the 1.1% that was expected in terms of a percentage gain. In terms of existing home sales themselves, 4,170,000 at an annual rate, and that is up from 4,004,000. So we're looking at a fairly strong month. Now, the important thing to remember about existing home sales is that they're based on contracts signed about 2 months ago. And 2 months ago was when we hit our low in mortgage rates for the past couple of years, and it's gone back up again now. So this is probably not something that's going to continue for the next few months. In terms of the data, we get single-family homes up 3.5%. Condos and co-ops were flat on the month. So single-family homes, people out there buying maybe to close by the time school was over so they could move. But at this point, with rates going up, not sure that that's going to continue.
No, and I mean, I guess you have to take every good piece of economic data, you know, as a good piece of economic data, and a lot of wealth has been created in the country with markets at these levels. But what should we read about this? I mean, we heard earlier, you know, Toll doing so differently to, you know, home sellers out there that cater to the other parts of the K-shaped economy.
Yeah, well, Toll is on the top part of the K.
Yeah,
and
exactly.
The others more on the lower part of the K, and we know that there's a K-shaped economy with people who are making money off of assets and from the stock market doing much better than others. But with interest rates where they are, we're still stuck in the same situation we have been for years, in that a lot of people own houses with low mortgage rates and they don't want to sell their current house to buy something new at a much higher rate. So it's going to take a sustained drop in mortgage rates to really kickstart the home sales industry.
Would this be another way for Kevin Warsh to sort of say, you know, look, it's not a good idea to increase rates right now, you know, not just because the president maybe wouldn't want it, but also because, look, it could crimp home ownership? Well,
it probably is a minor argument. There are other reasons why he doesn't want to raise interest rates right now. And at this point, they're going to have to do a lot more work. You would have to have Fed rates fall significantly in order to influence overall mortgage rates, which are more pushed by the 10-year note than by the Fed numbers. And so markets at this point, you've seen, are expecting inflation, and they are then pricing for it.
Have to ask you about CPI tomorrow. We were very surprised by the payrolls data, we can't be absolutely certain that we know what's going to happen tomorrow when the numbers cross.
Well, there's a fairly strong feeling about what's going to happen tomorrow as people look at what overall prices have been. We're expecting a jump on a year-over-year basis, the headline number to 4.2%. That would be the strongest in about 3 years. And the core still under 3% at 2.9% is the forecast, but that's still way above what the Fed wants to see, and we're seeing basically inflation moving in the wrong direction. So we will expect to see some bad news on inflation tomorrow. It'll be bad news for the Fed, which doesn't want to raise interest rates, but maybe getting pushed in that direction if the war doesn't end and these price rises continue. Also, bad news, obviously, for the White House and Republicans in an election year.